Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Monday morning edition of Benzinga's PreMarket Prep. Hope everyone had a nice, relaxing weekend. Spencer Israel here with Joel Elconin and Dennis Dick on the show today. We're going to talk about recap Friday's action for you. We saw how FANG kind of overpowered the market there on Friday. We'll talk about some news from this morning. Mondelez is really the only notable earnings report that we're seeing this morning. We'll preview a lot of the big ones coming later in the week. And, of course, it seems like a lot of analysts were out on Friday, so it's a ratings catch-up day today on Wall Street. We had a last-minute cancellation, so you're lucky you get Sean Udall again. Sean will join us today at 8:35. Joel, how's it doing in the markets today?
S&P futures are in the red by 5.25 points. All-time closing high, 78.50. Our pre-market high is right there, 78.25. But before that, we got to take back mid-range on the session, so 25.75 is my number there. Crude up a dime at 54. I think that kind of helped the rally out on Friday because, as we'll discuss with Dennis, not all stocks were up on Friday. As you can see, crude hit a high of 54.20 on Friday, inching our way back up to the trading range. So we need to keep a real close eye on crude here. Gold, silver in the red. Gold only by 20 cents here at $12.7160. Silver down a couple cents, a penny as well at $16.74. Good morning, Dennis. How you doing on this kind of dark and dreary Monday morning here in the Motor City?
That's how I feel inside as well, Joel. It's not only dark and dreary on the outside, it's dark and dreary on the inside here too. You know why?
Because the Oilers lost.
Oilers lose, Lions lose. Sports just ruined my life. I'm always, if the Oilers win, and I'm hardcore hockey, but I like my Lions too. If the Oilers win, I'm happy. Everything's going well. It's a good day. They lose, and I'm like depressed. Why is that? Like, why do you get so? I know how attached you are to Michigan too. Why is it that we get so emotionally attached to our teams that it actually affects how we feel the entire next day, and sometimes even for a couple of days? Why is that? Chat, you can answer this for me too. It really, like my wife asked me, and it really, logically doesn't really make any sense. Like it doesn't really, impact my life in any way, but it does because it just, upsets you when your team loses.
I don't know, but it just makes winning that much better when it does happen, which I know.
And it does. It's like emotional
you,
highs and lows.
I know for you that's like a rarer thing than most, but it does happen.
Anyways, yeah, because when you cheer for all the losing teams, Spencer, it's like I'm depressed most of the time for my team.
Because you're immature, maybe? I mean, that could
be. This happens when you come on, Joel, with Michigan. Come on. When Michigan loses, we can tell. You can tell you're on the radio.
It's all about the game. It's all about going up to Ann Arbor. It's all about being with friends.
But when your team loses.
It depends. No, I've come a long way. I'll come a long way because when Lisa and I first started dating, she would never make plans on a Saturday night because she didn't want to subject anybody to my behavior if Michigan lost. But during the Rich Rod era and the Brady Hoke era, I kind of got used to it a little bit. But it's all about Ohio State, and I don't want to get started yet because we're going to be a huge underdog.
That was a hell of a game. I did watch that game. That was unbelievable.
Yeah, but, good thing we got the markets, right? To come back to it.
Well, that's not working that well for me either. So, okay, now, it's like, when things are going rough with your sports team, you try to find things that are going bad in your portfolio as well. And you know what I did? And I think, I mentioned this on the show. I bought AMD a little while ago, about a month ago. And you know what I did? I traded Intel in for AMD. That had to be the worst trade ever in my investment portfolio. Here it is, and I'm a value guy, kind of totally went against, because I'm all about having a couple dividends. Intel had a nice dividend. I liked it for that. And, 2.5% yield it was over. And I bought it at 37 or $38. And it went up a little bit. AMD came down a little bit. And then I was like, okay, I'm going to, trade these in because, AMD's pulled back a little bit here. And, they have the whole potential Tesla thing and everything. Well, now looking back, Intel's up at 44 and AMD gets downgraded today to underweight at Morgan Stanley. It's 11.35. Man, that was a terrible trade. And I never to go in that and sticking, going from value to growth here again.
And do we have the details on that? What just straight cut to sell here? Joining the
underweight. That's the equivalent, right?
Yep. It's the Morgan Stanley equivalent.
Price target $8. Ew. And that chart looks horrible. And AMD, down, on a day where Momos were taking off on Friday. I mean, you had Nvidia trading up. You had Amazon and Google just monsters. Usually AMD can kind of be in that, with the trade with those stocks, but at least it had been. Not anymore. Completely decoupled since their earnings report here. And AMD, obviously, not, having a good morning here again. So this looks horrible. Breaking through the 12 support.
Oh, way below the 12 support here. And we got some trading going on currently. 1134, that's your pre-market low, but you're just not far away from that. So that's a big problem here. Breaking down through that $12 support level. On the daily charts, you got to go out a long time here. 1162, we've already taken that out. So let's go to the monthlies and I don't want to say 1057. I mean, at this point, 1134, hold out for $11 at least as a target on the downside. But I saw that come down to 12 and it really didn't bounce. And I'm like, wow, this is not good. It hit 12, couldn't even get over 1220. Then you see what happened to it. Maybe longer term support, 1057. That was your June low in AMD.
This looks broken to me too. And I can't believe I own it actually, because the stock that I didn't own, I never owned. And it kind of goes against my thing because they don't make a hell of a lot of money. So it doesn't really fit in there. But I was like, you mix it up. It's not a huge position, but it's a position, of my 100 stocks. It's one of them now. And it's like, I look at it and I'm like, why is that in there? It doesn't even fit with the other ones. All the other ones have dividends, more of a value guy. And here I picked the one guy that's kind of, with the whole momos, and now it's not. So I feel like the market's against me right now. And that's probably due because my sports team's bad. There's a correlation.
Dennis, don't even trade today. Okay, Dennis, don't trade to open. Just go mow the lawn or something. Is it some kind of Canadian holiday today that you can
my
take?
Day trading is doing very well. I had a pretty good month in October. I've had a pretty good year. I'm actually about 50% higher than last year in my day trading portfolio. So my day trading is going well. It's my investment portfolio that's taking me off.
And the market.
Maybe I should just go get a money manager for my investment portfolio.
I'll
day trade and I'll go hire a money manager for my investment portfolio.
And you'll be calling them every day. But anyways, we got to cover some other news. Intel hit $45. We didn't even cover that earnings report on Friday because we had so much going on, but stopped on a whole number 45. So that could be your resistance in Intel. Nice. I didn't know you bought that thing after the breakout, Dennis. That was just I
bought on the breakout.
Wow.
And you know why? I actually had Intel in my portfolio for years too, and I sold it back when the PC market was, in shambles there. And Intel, did go into the gutter after that, so it was actually a good sale, but I never rebought it. And obviously they've picked it up. We're going to have chips into everything. I think all the chip stocks in the long run still are going to be okay just because, but this is a value chip stock. I mean, they're all multiples low. If Intel starts to pick up, some of these other contracts, we're going AR, we talked AI, all this stuff. Intel fits into all this as well. I do think they do. So, I hope it can come back down eventually and then get the stock back, but it's gone right now. It's full breakout mode.
And the purchase of Mobileye, that was a few months back, and that that's getting into the expanding into the AI and AR with supposedly they have the chips for the Tesla cars. But we were talking about this longer term chart before, and you can look at like a weekly and say, man, this thing is just way overdone here. But then you go to a monthly, and it's like the party actually 37, 38. We bought it after the actual breakout. But still,
what was the all-time high? Because this stock was higher too.
75.83.
What was the price all-time high?
75.83.
What year was that?
That was in early 2000.
So here you are, and this just goes to show you again. I like to reiterate this point every once in a while. When you chase markets, you get into bubbles, and this is not a bubble for Intel. But here you are, 17 years later. If you bought Intel on the high of the tech bubble back in the 2000, you are still down 30 points. 17 years later. that was, just an incredible, that was a bubble back then. We've said it before on the show, but, a lot of people who just started trading the last 7 or 10 years haven't experienced this. A lot of people, when they look at the chart of Intel, think it's an all-time high because a lot of times you look at your charts and a lot of them want to go back 10 years. And they think, oh, this stock has just been a monster here. That tech bubble was something else.
Yeah, and, we talked about it with some people over the weekend too, and I just said, it's hard to make the comparison because these companies are making money and they're blowing away. Yeah. Blowing away earnings reports. This is just a recap. I mean, it was either a love them or hate them market on Friday. And
it was incredible.
They loved FANG, man. That thing just took off. Facebook, Amazon. I didn't see what Netflix did, but
it was up like $4 or $5 too. Not quite all-time highs, but it got right back up to $100.
What?
Netflix and Google. I mean, Amazon was it was the one that was taking it all. And it was a full-on Amazon trade. You know why? Because they were absolutely killing the retailers too. It was like Amazon straight up and will murder every retail stock. Macy's, Kohl's, Nordstrom. If you were retail, you basically got beat up pretty good on Friday unless you were Amazon.
Oh, wow. Macy got down to
Macy's in trouble here now. Now it's through 20. Now it's right back down at support. I mean, it's got to absolutely hold $19. But it's kind of through it. 1932 was a low there, Joel. They're getting downgraded to sell at Citigroup today. Price target 16. I've been saying on the show for a while, why don't you go after Macy's a 7.87% dividend? I don't think the dividend's safe. I've been saying that for a while at Macy's. I've also been saying I think Macy's is going the way of JCPenney. I think, this is, I've said this for the last year when the stock was a lot higher. I mean, I just don't see how they're that much different. And you see JCPenney in a whole lot of trouble here. I'm scared of Macy's. I'm scared to buy it down here. Maybe it's going to be a great opportunity. They're saying, the real estate with Macy's better. Maybe that's the big difference. Maybe there's a big real estate play here. But what is that real estate really worth? If you're looking at all this mall real estate that they've got, people aren't going to the malls anymore. You know that. So it's not worth as much as you think. I mean, look at your Taubman centers, Joel, which you had the call of your life, or one of the big calls, when you were saying, this TCO at $76, mall retail is a good sell. And here it is at 47. You said that, a year ago on the show.
I was a little early.
You need to just start listening to her calls sometimes.
Yeah, boy.
Because, here we are, we talk a lot. We say a lot of different things on the show, and then, we forget about them because we're talking a lot of different stocks. And sometimes we trade some of our calls, but most of the time we don't. And, man, that was a great call by you, Joel, on TCO, because this thing's straight down all year.
Yeah, and the way I was looking at it was, these companies are either going to be going out of business or they're going to be asking for rate reductions, and the transformations on the malls, what their different uses are going to be is something that looks like they haven't figured out yet.
So anyways, you just look at this and it's a rotation. It's a rotation to online shopping. And it's no coincidence. You look at a stock like Amazon up, 130 points with a great earnings report. And there was some other news. We did have the JCPenney earnings, or warning on Friday, which maybe kickstarted it all. But, like we were saying on Friday, it's JCPenney. I mean, we knew this has been the slowest death ever. But, we know JCPenney is now blown away. But JCPenney actually came back a long ways from its lows. The other retailers did not. Macy's opened and kept going straight down. Kohl's opened and kept going straight down. And Nordstrom was down as well. There's still that potential deal still kicking around, but, they said they don't know about the financing. But these department stores, the traditional ones, are in a world of hurt. Dillard's popped back a little bit there, but it absolutely has to hold 50 too. So, you look at the $50 level at DDS. That's huge.
Yeah, Spencer just wants to chime in here. He tried the Chipotle queso on Friday.
Oh, how was it?
It was actually pretty good. And then I asked the woman working, I said, hey, do you guys sell a lot of this? She's like, oh yeah. Oh yeah. She gave me that look like, oh yeah.
Maybe this is the difference for Chipotle. Maybe this is going to bring about. Did you get sick?
Not yet.
Not yet. When did you eat?
Friday night.
Oh, you should be good now.
Okay.
It happens within 24 hours.
Wait. Actually, but now that you mention it, I want to show you this picture, or I'll read you this picture I took. There was a sign in the restaurant And I thought this was very odd. It was a sign on the counter at Chipotle. So it says, FYI, this restaurant is currently serving carnitas. This is at Chipotle in the suburb of Detroit here. This restaurant is currently serving carnitas and chorizo made with pork that meets or exceeds all of our animal welfare standards, but not all facets of our antibiotic control.
Huh?
So, yeah, okay. I'll read this again. This restaurant is currently serving carnitas and chorizo made with pork that meets or exceeds all of our animal welfare standards, but not all facets of our antibiotic control. So I wasn't really sure what that meant. So I didn't.
What that means either. Why would you post that side?
So I didn't get the carnitas or the pork or the chorizo. Is all I'm saying.
They're basically saying carnitas and the pork might not be safe.
so I didn't eat that. That's all I'm saying.
Okay, that's over the top. I don't know if they should be posting that sort of types of side. That would scare. I don't know if anybody's going to order it when you see that.
It said it right next to the food. So I was like, gonna not get that for now. So I don't know what's going on with Chipotle.
Legal disclaimers for Chipotle out there now. If you eat this food, you might get. I'm going to stop picking on Chipotle. They've been picked on enough by the shareholders. It's 276 here now. Joel, give us the technicals. We got 3 days on Chipotle where the range is kind of almost similar. I mean, the highs are all in the same area. The lows have slowly been creeping up a little bit, I guess. But what are your thoughts here as you got 3 days after the disaster report?
Yeah, good catch here, Dennis. The three highs within $1.50. The lows are a little bit separated. But 270, the low, the move here. This one, you kind of want to look for a breakout above that 3-day high at 283.99 or a bust below that 270. So pretty big range, but inside day, I'd say maybe on this one, before I look, how are we trading in the pre-market? Flat in the pre-market?
Yeah.
I think seller's exhaustion in this one. I think they're just tired. You traded $10 million on that big down day, took it from 324 to 277. You got a little pop. People wanted to sell in the strength, only traded 3.3 million. That was on Friday, and then yesterday's volume tapered off. So we keep an eye on the low and the close are right, very near each other. You got some room down to 270 after that, but I think the sellers are a little tired in this one.
I don't know. They're not tired in a lot of other things, though, too. So let's move on here. A lot of other stocks. We talked FANG. We talked from Friday, but we've got some interesting ratings changes. Like you were saying in the preview of the show, Spencer, there was analyst catch-up day here, and there's just a ton of analyst ratings. Merck and Bristol Myers going opposite directions today. Merck is a triple downgrade today. 3 downgrades. The reason being, on Friday night, they tried to slip this one through. That one drug that they've got cooking there wasn't cooking so well. Spencer, you got the details from Friday night. There was a drug with Merck.
Yep, I actually forgot about that until you mentioned it just now.
I know. They always try to sneak this stuff through late on a Friday night. Nobody will notice this on the wire, but this one drug isn't doing so well.
It was a European application for Keytruda, and they had withdrawn it. So they're withdrawing their application for European regulatory approval for one of their drugs.
And that hit Merck after hours on Friday was down $2. And we know analyst Chase Price, I guess a few of those analysts did not miss that report because you got a downgrade from Barclays, a downgrade from Morgan, and a downgrade from SunTrust. Been a long time since we saw the triple downgrade all on the same day here. That's knocking the stock down 4% here this morning. We got Bristol Myers, which has a competing drug, trading up $1.61 on this news. So Bristol Myers going up. We got Merck trading down significantly here. I got Merck in my investment portfolio too. They are punishing my investment portfolio right now. What are your thoughts here, Joel?
Huge move for Merck here. I mean, to see a 2-day move in Merck like this is really
not earnings.
Yeah.
It's not, and then we were saying it. If you're a drug stock and you're reporting earnings, they've been beating you up. And Merck was no exception. Same thing.
And the other thing that I was noticing about Merck was, and we'll go back to the longer term chart to take a look at it, kept on getting all that good news, remember? And they'd pop it up to 65, 66. And then, they come back and then they'd have more good news and they popped it up to 66. And it was like, they could never break out from that level. It was like endless sellers there. This has to be like this red bar here that you're seeing on the weekly chart here. I mean, that encompasses 3 weeks in the stock back in September of 2016. Now approaching some major support here. 55.10, that was your June 2016 low. Pre-market low is 54.75. So absolutely has to hold this $15 level on 9-point move and just a couple sessions. You may think it's overdone, but man, oh man, the downgrades are coming in on this one, and see what happens to the pre-market low of 54.75.
And such a momentum market, when it starts turning against you, it turns hard. I mean, we saw what happened with Celgene, and they had the disappointing drug news, and then boom, the disappointing earnings report, and they absolutely murdered it. And it's funny. The IBB and the biotechs a week and a half ago were looking pretty good. And I tell you, they are an epic disaster now. It's amazing how when it turns, how fast and how hard it turns against and it turns the other way. I mean, Biogen is down 40 points in a week and a half. Celgene, we know the disaster, down almost 50 points from the highs in about a week and a half. Merck now, you're looking at a stock that's trading almost $10 off where it was a week ago. This is Merck. This is a stock with 3.5% dividend. This is a stock with a big drug port, lots of different drugs there. I mean, they absolutely crush stocks when they crush them.
And you see BMY sold off earnings from 64 area down to 60. Let's see what kind of pop it's getting here, because they were murdering this thing on this Keytruda news, and now it's not.
Well, I was going the other way. It was looking like the drugs. Okay, now it's going the other way. So now, you know what I'm going to say is this thing is overhead supply here. If you're a drug stock and you haven't been hit yet, now, if you had Bristol Myers and it lost like 10% last week, or in the last 5 days, now you get a little relief rally. This thing gets anywhere up near 62. I think there's sellers all over the place in this. This wasn't even their drug news. This was the news, bad news from Merck popping this. I think, I'm a fader of this Bristol Myers rally, BMY.
Pre-market high just above where we're trading now. 61.59 is your pre-market high. Not a lot of volume. This one's a tough one, Dennis. You're sticking out at 62. The high from yesterday was 61.69. So here you are, trading right at the high from Friday off some good news. So follow through the 61.69 or lights out down under $60. You had to close at 59.94.
Jump over here to the autos. We got General Motors getting cut to sell at Goldman here this morning. GM chart looks a little bit head and shouldery now here. There's not much of a right shoulder, but you got the left shoulder from 46. You got the head way up there, 46.76. I'm just looking from the last couple of weeks. And then the right shoulder, a couple days here. Now we're breaking down. This is breaking down through the 44 low that we had, 44.15 back on the 12th. There's some air below here, Joel. This is concerning chart here on GM.
Look at the daily here. You had that top at 46.76. That was on earnings, and now it just looked like you were trying to hold 44 here. But now this news has pushed it through at GM. I know there's a couple gaps to fill in here. Your pre-market low. You're not far off that at 43.06, but just I like 43 here for a short-term cover. You got a low at 43 even on the third, 43.20. That was a big gap up day. So, man, a lot of windfall from anybody got this up near 47. Problem is, under 43, I mean, you don't have any cover.
Dicey.
43 absolutely has to hold here. And now you got Fords under $12 too. So that's not good. That's a key psychological level for Ford as well.
Yeah, 12's big and Ford trading 11.97 here this morning. So again, the market's turned on a few stocks. It was a wicked Friday, just to recap again. When you're seeing Amazon up 130 points and Google up 50 points, Facebook and Netflix, Apple all having great days. And then you just saw other stocks getting absolutely murdered. We know the biotechs got murdered. Stocks like Merck got murdered. Something that we talked about. It had been running up quite a bit. It had been stronger than the other ones. It was trading flat when we were talking about it on Friday. And I was saying, I'm a little bit concerned here just because the stock it fits the description of a stock that needs to blow it away. And they didn't blow it away. And man, they turned around and they smacked it.
Which one was that, Dennis? You cut out.
Chevron, CVX.
Oh, yeah. Chevron. And that one came out with the report. It just hit it immediately. Never had a chance in the regular session. Big gap down. Let's see how it's trading today. And take a look. Hit 112.57. I believe that was from Friday. Keep an eye on that low from Friday, which was 112.57 in Chevron.
Jump over here to a few other ratings here. We're doing the ratings early because there is some interesting ones. Under Armour gets cut to a Bank America price target down at $12. And we're looking UAA, and this actually is trading down 50 cents right now. And this is clinging, actually taking out the support level. So this is a new low here for Under Armour as well. Valuation's still an issue for me here on Under Armour. I just can't even jump into it here. I mean, people say, oh, wow, this stock's getting too cheap. The multiple was crazy, though, when it was 40, 45 bucks. And it has just come out of this stock for the last year, and it's been a hit hard. And here we are. We're looking at Bank of America thinks it's going to 12. Now, I'm not sure about that, but I'll tell you, the chart on UAA is not pretty.
Whenever you take out a new low of the move, you're going to have people, putting additional selling pressure on it. Got down to 14.90. Seller in the pre-market, though, at 15.50. Let's look at the range from Friday in Under Armour. Spencer stocks, since he went to Maryland. 14.90, not much volume traded there. Important to think, keep up longer term. The former low of the move was a buck higher than that. So 15.75, your former low of the move up to $16. That would fill the gap. So now you're going to have a wall forming. Going out longer term on the monthly charts, you got to go back. Oh, fuck. 13.91. That was your low in June of 2013.
One more I had on my list here to talk about. Spencer, if there's any, or Chad, if there's any ratings you want to talk about. Actually, Spinner just said Intel did upgrade. I didn't mention when we talked about Intel earlier, but BMO did upgrade it to outperform here this morning. $58 price target on it too. Joel already gave the level though. He thought 45 bucks. I think that same level is a little bit resistant to me as well. JD.com upgraded UBS price target 48 bucks. Stock has come back down here and it's actually back at support. So I guess a little bit of a value call here for JD from the last, year. I'm just looking, but when I look at it a little bit further out, it looks head and shouldery too. So I'm not sure I like this chart either.
JD.com getting a little boost here in the pre-market trading. Let's look at just coming off the low here. Here's the positive thing though. If you're looking for a positive in JD.com, you did have a soft and you finally filled a long-term gap. And a lot of times you get that price action, you fill the gap. 35.90 filled the gap. The low, look at that, 35.79. So I like it. That could be an intermediate term low here. I'd go with this one. Opposed to some of those other upgrades. Trading up 50 cents at 37.93. Not a lot until 39. That's your major resistance, your 3, 4, and 5 day lows surrounding the $39 level. But boy, got another buck or so to get there.
All right.
There was one more that I thought.
Yeah,
was
what do you got, Spencer?
Conagra getting I just lost it there. Conagra upgraded at Stifel from hold to buy. That was one that I thought was notable. They had earnings a few weeks ago. And then the other one that just caught my eye was I always think it's interesting when one firm upgrades another. So Keefe is upgrading Piper Jaffray to outperform.
PJC.
Yep. PJC.
It's been moving here too.
PJC
this is a stock.
PEG.
Yeah, stock we don't talk about a lot on the show here, but it's been hot. PJC's been straight up here since the bottom of September. 53. It turned on a dime and it's been straight up.
Let's see what good old Piper Jaffray can do. My buddies from Oldie all working there. This looks like a little bit of a different chart, though, doesn't it, Dennis? Compared to some of the other banks and brokerages, right? I mean,
they've all went up. So, it's still in the last little bit, they're still trending up, but a lot of them have had a little bit more pullbacks, maybe. Well, not really. They'll look at the JP Morgan chart, look at the Bank of America chart from the last month and a half. I mean, all the banks are straight up really in the last month and a half.
Yeah, but PJC hit 81.85 in February.
Oh, you're looking further out.
Yeah.
So it was beginning of 2017. Yeah, I don't know what was going on there.
Yeah,
so
and then
PJC maybe just got a little bit overdone. You get the correction, a little bit. Now it's starting to play catch up again.
Yeah. Let's see. This $66 level peaked out there in July. Tried to peak out there yesterday. Let's see what's going on in the pre-market trading. 66.30. I like this one to go north. It could be a breakout here. PJC above $66 and a lot of air up to 68 and then. So critical for Piper Jaffray to hold 66.
What was the other one, Spencer, that you were talking about?
Conagra.
Conagra.
CAG.
Food stocks. We haven't talked food stocks for a bit. They're still been in the gutter. I mean, these food stocks, when you really look at them here, they have not come back at all. It's a little bit of a valuation issue still, too. I mean, some of these trade with multiples of 25, and you think about it, they're not really, the growth isn't there. So that's why I don't have any food stocks really in my investment portfolio, because I like the multiples when they start getting under 20. I like them when they're down at 15. And you look at it here and you look at, I don't know where Conagra's multiple is, but you look at Kellogg's, or you look at Campbell Soup. Campbell Soup had a pretty good last couple of days, but I don't know. What do you think on the food stocks? Let's start with Conagra, CAG. What do you think on this one? It's getting downgraded today, or what was that? What was it called?
Upgraded to this morning at Stifel from hold to buy.
Okay, because I'm just looking here. It's not trading much. So it's trading. Oh, it's ex-dividend. Okay, that's it. Because Conagra actually, CAG closed 33.47. So because it's ex-dividend, it doesn't appear like it's up much, but it is up. It's up 25 cents.
All right, with the ex-dividend here, let's do the pre-market trading to see. Kind of tricky there with it. Boom, boom. I don't know. It kind of been in a trading range from 33, just under 33 to 34.70. So until he really gets out of that range, really not a lot of interest. I mean, it's trying to rally, and then really can. So not a good looking chart. Longer term, until this thing clears 35, still looks like he got a major downtrend intact in Conagra.
Groundhog Day and imbalance land. The same three are always there. GE just goes down 50 cents every single day. I guess I should have sold it. 390,000 shares to sell here. Again, General Electric. Again, it's down here in the pre-market because, it's just a day. It's a Monday. It's a Tuesday. It's a Wednesday. GE goes down. Alibaba, 71,000 to buy. As buy balance every day. Then our friend Square, SQ. It's up big. Is there news on Square today?
Yeah,
it's up another 2%.
Man,
and it's got 100,000 to buy. That's big on Square too. Although I wonder about $36.
Yeah, 36. Have we seen any news on Square here? This has
been a month. I should have stuck with this. I sold it. I had it for a bet. I sold it. I've traded on the breakout through 30. Should have stuck with it. I mean, this has been a monster.
Yeah, I believe they have earnings later in the week too. So someone just trying to get out ahead of earnings, 36.13. That's your pre-market high. That's a buck above the high from yesterday, 35.29. So you need to get there to fill the gap. Dennis, going back to the GE here and going back and forth with Spencer. Do you think it's a big fund liquidating, or you just think that someone's saying,
big fund liquidating?
Yeah. It's just like they're not trying to short play. It's like
every day for the last 3 weeks.
Yeah. That's what I'm saying. Yeah. That's what I think. I think that's how they do it. They just, they got such big position that it's just too coincidental. It's always like 300,000 shares. I think it's somebody.
I think that's fair.
GE will 1937 come into play eventually. That was your low on the August 24th flash crash here. Closed at 2079. We're drifting a little bit lower, but man, this stock just hasn't caught a break. You wonder if they just need to just cut the dividend and get it over with, right? And then
I think so.
Yep.
It's like a death by 1,000 cuts as everybody's expecting it. If they would have just cut it a while ago, it probably would already be trying to recover. But because everybody's expecting, they just slowly sell it every single day. Just keep selling. I don't know. There's going to be a hit probably when they do cut the dividend, but it's went down so far. You almost wonder if it doesn't get hit, maybe even close higher on the day after that. Just like the last earnings report they had, which wasn't good. But remember that day, they hit the stock way down. It came all the way back. Yeah. And I was like, okay, well, maybe it's a turning point. Wrong. No. Everybody just comes in. Overhead supply wins again. I mean, it's hated. It's absolutely hated.
Yeah, just keep an eye on that August 24th flash crash.
Is there news on MasterCard? You got a ratings change or something on MasterCard? That's just blasting off right now.
Yeah.
There's something going on. MasterCard, Square, is Visa up too?
Yeah, what's happening with payments? They're all up big right now.
Is Bitcoin crashing or something? Or let me see here. Wow. Big move here, 158.72 for MasterCard, Visa. Something going on in payment land here. Visa is not up as much.
Visa's not up. Maybe there's a big ratings call or something from somebody, because it's interesting that Visa's not up.
All right. Well,
Yeah, I'm digging around, but while
buy it, Dennis, buy it.
Buy it. Why would I buy it? I'm a fader. I'm
No.
one of those traders that still try to contrarian calls sometimes.
All right, it's 8:35, and we're gonna bring in Sean Udall here. We're gonna bring him in on the fly, of the tech stock strategist, and we're gonna try a little something different here with Sean because he comes on. He has a lot of great opinions on stocks, but we don't get to talk about enough stocks with him. So I'm gonna surprise him here with the little segment. I did text him I was gonna try and do this, so we're gonna try and cover.
Good morning.
Good morning, Sean. How you doing?
Good. Didn't mean to interrupt you there.
No. So I told the folks that we have you on and you cover a lot of stocks and we never get to cover as many as we should. Okay. So we're going to do a 10-minute segment here. And I'm going to start out with some stocks. I know some you follow, some you don't follow. And you got a minute. You got a minute on them. And
10 and 10.
10 and 10.
10 and 10.
The most informative 10 minutes in financial media is coming up right now, Sean. Okay?
Can you do it, Sean?
Can you do it, Sean?
Yeah. Oh, yeah.
Because there's a lot of money here on the desk saying we only get 4 in. That's coming from some of our news desk people. But I'm going to be real diligent, so I'm going to interrupt you, and I'm going to save the best for last here. But I'm going to start out with Apple, who reports on Thursday.
I think Apple continues with the theme of strong beats. I don't know if the best thing I could say about Apple is I don't know if I'd buy it, but I sure love it from 90. I'm still long I'm actually long from lower, but I really liked it at 90. I just, again, it's a mini FANG. I don't know if I'd put fresh money in it here. But I don't know. My personal price target's like 200. So I think it'll go to 200 and it'll probably grind its way there. But yeah, I'm basically a neutral on Apple at current prices.
All right, you did quick on that one. A stock, I know you love the short. I'm sure you didn't get down and dirty in it on Friday, but can you warrant this move in Amazon off that report, AMZN?
Well, yeah. Now this one's. They did have a great report, but was any of the greatness a surprise? So I don't think it was much. I'm just waiting. I'm just waiting for that little curl, that little turn. I might wait for a 5 EMA, which is a 5 exponential moving average on the daily chart, to kind of flatten or weaken or start curling. I'm going to short Amazon. It's just a matter of when. I mean, if it goes to 1200, I'd rather short it at 1200 than 1080. So it hasn't really given me the signal that it's ready to back off yet. But I just don't really think anything was that unexpected. It was a great report. So you have to be a little more cautious shorting a great report. But I don't think anything unexpected happened. I don't know if the stock really has that much more upside juice. We'll see.
All right. That was another good one there. 56 seconds. All right. John Dodson. He's talking about Alibaba. He's had this one written down to buy before earnings, and earnings are coming up. What do you think of the Bobster?
Well, I would say that, if you love these hot Momo names that trading at multi-year highs, I would favor Alibaba over Amazon for sure, because they got a younger stream of growth, they got a higher total growth rate, they've got more levers they can probably push. But same thing, this one doesn't really do. I'm kind of waiting to short this name too. There's better, if you want to be long lots of stocks or high growth stocks, there's stocks with higher growth and there's better longs to be in. So, I don't know if we talked about it. I don't know if you and Dennis remember this, but I really, really like the stock. I think around $65. So, it's hard for me. If I love a stock at 65, it's hard for me to really love it at 176. So, and I might be a couple point. I think it was 65 though. I've been long this name before. So yeah, again, it's probably the same theme, it just doesn't really do much for me here. There's so many names that have to play catch up to names like this. I just don't know if you really have to be long these kind of names.
All right. We hit the minute mark in that. How about, and I know you liked this stock a long time ago. We talked about, I think it was under $20 here. Intel, INTC.
Yeah, that one I really did like. I wish I would have had some Intel. I did have it before. In fact, I was saying, hey, buy Intel over NVIDIA. You'll probably get the same return or better from a few months ago. I think that's been really, really right on. So, Intel, gotta say, I mean, that report was good. I think here's the thing people underestimate. They underestimate the amount of things, the R&D that Intel spends. And the R&D always does produce future growth. So is this the time Intel finally outperforms and does well? It probably is. I mean, it's done great from like the low 30s, and it's only moved up 10 points. So, in a market where other stocks have moved up 70, 80, 90%, I think Intel can probably move up more than 30%. So it wouldn't surprise me if Intel has a $50 handle on it in a few months.
A $50. Okay, we will keep an eye on that. Also coming up, earnings this week. Tesla. I know you've never been a big fan of Tesla, but give us your take on Tesla.
Yeah, well, here again, of the love darling stocks, this one's chart's probably the weakest right now. Now, you got to be a cool hand, Luke. If you're going to be aggressively short, Tesla into an earnings print, you better be prepared to either make a lot of money or lose a lot of money. Same kind of deal. I was short this. I'm not short now. I'm kind of waiting to short again. There's other things I probably like to short now better. But you kind of got a weakening chart pattern here. In fact, I would say the future chart patterns of a lot of the names you've rattled off will end up looking like this. Yeah, you got a potential double top, potential inverse head and shoulders. So, there's a few things happening that don't. I would say they better deliver a really good report, or this thing could, you could get this thing down around 250 pretty quick.
Oh, wow. All right. Coming out of the chat from Down War Dog, Shop. That one, I don't know if you follow, got hit on the Citron mass and kind of recover. Shopify. What do you think of this one? Back up.
Yeah, in fact, that's on my short list too. I would say that I wouldn't be surprised if they deliver a really strong report. I wouldn't put Shop in the FANG category. I don't think. I mean, they for a couple of years they really underperformed and didn't do much after delivering really good growth. So the move probably from sort of 65 or 50 to here has been a big catch-up move, catching up with the growth and the prior underperformance. But there again, I mean, I just don't really see a reason that I would want to put fresh dollars on the long side on this name. That's probably the best way I could put it. I'm not looking at this every day for short stuff like I am some of these other names, but it's pretty juiced up. So it doesn't really excite me. I can find better names than Shop.
This is a general question. I'm going to interrupt the
sure.
10 and 10 just here for a second, and just to get your thought process, because when you're shorting these stocks like Amazon, I mean, this is really going against the tape here. How do you pick your point to be able to do that? And are you tight with the stops? Because I mean, here's a stock that just went in rocket ship mode, and you could have said Amazon, 1050, 1070, 1080 on Friday as it was climbing, and you'd have been absolutely annihilated. How do you get in the way of this rocket ship?
Yeah, I excuse me. I have to see something. I had if it just looks and feels and is acting strong, well, yeah, I'm pretty much going to ignore it for the day or maybe even a couple days. So I've just got to see. I've got to see some. Here's the best way to say it. When you the guys running towards the end zone and they just start slowing down the last 5 yards, that you got to see some sort of deceleration in sort of the heat of the chart, I think is the best way to say it. So for me, I mean, a great tool, and I think more people should use this, is I like it to use EMAs. So exponential moving averages over moving averages. And one I really like a lot is a 5 EMA. And so, this stock can be strong until the 5 EMA catches up with the price. And now, if you're looking at catching, $2 and $3 and $4 intraday turns, which is something I really don't do a whole lot. So you said, okay, so are you tight with the stop? Here's what I would say. I'm really tight with my entry. I would much rather be tight with my entry than tight with the stop. So in other words, instead of just taking a chance that 1100 is a high and maybe I'll catch 10 points or something, I'd rather kind of have evidence or feel like I've let all the buyers exhaust themselves, or a lot of the buyers exhaust themselves. Let the algos move on to some other name, and then the odds of success are a lot higher. So I think that'd be the better way to say it, because I don't really like to be tight with stops. I do have them, especially on short-term trades. But I mean, I'll be just between you know, all of us here on the air. I mean, if I short Amazon, I won't have, I mean, maybe an $80-$100 stop. I'm going to have a big stop. I mean, my stop would probably be 8, 10, 12%, something like that. So, you know, if it moves 50 points, I'm not really going to care a whole lot. But I don't want to instantly eat $100 loss on it. You know what I mean?
What are your
so that's what I don't want to do.
Spice wants to know, you mentioned there's other stocks out there, short candidates. Why don't you give us a couple short candidates that we haven't mentioned yet?
Oh, well, actually, I think I was talking long candidates. So here's a perfect example. Something like a Mule. Mule reported on Thursday. So I'd have to look. You guys could figure out, you know, Microsoft's total growth. I was probably less than 8%. So Mule had 57% year-over-year growth. Their billings growth was way higher than that, and their subscription growth was like 65%. And Mule finished the day basically flat. It was up. It spiked up about 10, 12%. So there's true growth. There's a younger company, recent IPO, been rocked on IPO lockup. Again, 57% growth, 65% subscription growth. That's smoking all these stocks that are being celebrated right now. And Mule didn't even finish up the day, didn't even finish that high. We're barely positive. So something like that is just, to me, a far better long than chasing all these other Momo longs. So I think that's what I meant earlier.
All right, Microsoft, MSFT. You just mentioned that in this.
Yeah, well, that again, I alluded to it. So get very good quarter, and something I pretty much thought they would have a good quarter, but I don't even think Microsoft is doing double digits growth. So it just doesn't, you know, when they're celebrating these stocks for having these great reports, and they've already doubled and you know, basically grown at 2 times the rate of GDP. That again, there's tons of other companies that are growing 40, 50, 60%. So you know, again, now that's a tougher short though, and here's why. Because if Microsoft ever did if they ever did employ a correct M&A strategy as opposed to a very horrible M&A strategy that they've had for years, this stock could be. I mean, there's always another stock that could be the next Berkshire Hathaway, because there's so many companies that have capital and currency now, but nobody seems to buy assets, right? We kind of talked about this on the last show. But if Microsoft could ever start buying other companies correctly, you could basically be permanently long the stock, kind of like people are permanently long Berkshire. Right now, though, I would say it's on my short list, but sort of unexciting, because it's more of a grinder. I mean, if Amazon were to really roll over and go down, it's going to go down a lot. If Microsoft really were to roll over and down, what am I going to do? Am I going to catch a move to 75 or something? I mean, that would be a nice short, but I don't know if it has like a ton of downside. So, you know, I could even make the case that Microsoft, you could be long for years and years and years on the stock. So that one, I'm sort of a neutral, sort of like a hold. But again, it doesn't excite me on the long side personally.
All right. Before we let you go, a couple ones out of the chat. Spinner, LITE, they're giving you compliments on Overstock and Mule. What do you, LITE, one of the Apple suppliers? We're looking at that.
Yeah, so that's a great example of something I could be more excited about. Now, they have had a big move. You know, they've doubled off of lows, but those lows were really, really crazy, extreme valuation lows that took years to make and made no sense. So, you know, this is a company with a lot going for it. They've got that 3D sensing technology that Apple's going to feature in the iPhone 10. Light is one of the 2 companies that basically provides that. So, you know, if people want to get excited and get stupid on the stock, there's a stock for them.
All right, Dan, to let you go here, what are you doing now with Twitter? And I'm looking at this report here. I mean, it looks okay, but they stuck in that MAU thing here, and I just don't understand. You're a little skeptical of this rally here, above $21. What? Give us your outlook for Twitter.
No, I'm not, because this is really where I thought Twitter should have gone after its last report. So I thought the report was good. Again, remember, they're not going to have a great report yet because of where they are in the phase of their life cycle and kind of their turnaround, where they are with corporate strategy and things like that. So put it this way, the last two reports have been as good as the reports that Twitter can produce, given Twitter's current state. So that's good. I mean, if a company is doing the best they can do, the stock should be going up, not down. So to me, one of the strangest moves last quarter is that they were able to sell off Twitter on really a good report. So here's the things I would point out. They had 26 or 28% cash flow growth. That's really good. I don't know if Microsoft had 26% cash flow growth, by the way. I don't know if Amazon had 26. Amazon might have, but I'm still not sure they had 26% cash flow growth. Twitter did. The MAU number was the only number that was light, just like last quarter, was the MAU number. The DAUs were up 14%. So if this follows other internet patterns of all these other internet companies that have lived before, daily active users should translate to monthly active users, which, by the way, should translate to two things: higher revenues and increased ad prices. So Twitter has a big lever. They've lowered ad prices by, I don't know, something like 65 to 80% over the last 2 years. So everybody wants to say that their revenues went flat and quit growing because of some internal problem or some problem with Twitter, too many trolls or blah, 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 all the things that are wrong. Really, the reason Twitter quit growing revenues is because they lowered ad pricing by 65 to 70% plus. So what happens when Twitter holds or starts increasing ad pricing? Guess what? If Twitter increases ad pricing 20%, revenues aren't going to grow 20%. They're going to grow 30 or 40 or 50% because they're adding more advertisers on the platform.
Okay, but Sean,
Sean,
but they were overstating their MAUs for 3 years. I mean, come on. 3 years.
I don't think they were over. How much were they overstate the MAUs by?
They said they said 1 to 2 million every single quarter.
Oh, big deal. Well, what's 1 million of 320 million? That's not even 0.1%. So yeah, I put it this way: if they're overstating the MAUs, how much is everybody else overstating MAUs? Every other platform. No, I think that's nothing. If you're looking at that, you're going to miss Twitter.
We've been on the line with Sean Udall. I think we covered a lot more than 10 stocks there. Sean, fundamental technical analyst.
That was fun.
You did it good, man. I don't know. I mean, we're going to have to talk with the boys on the desk here, but you may be our Monday morning quarterback here, making some great calls lately. And what I like, both on the long side and the short side. Sean, thanks a lot. We'll talk to you later on.
Take care, gents. Thanks for having me.
All right, 853. S&Ps are just hanging out near their lows. 3 ticks off the lows of the pre-market session. I want to get up to 25.75 here, test mid-range on the day. We found out the reason why. Was it MasterCard? Was he the Kramer stock?
Wave Trader was saying Kramer. It was Kramer's pick of the week, I guess, on Friday night show, which I missed. He gives like a pick of the week or something. So this was his pick of the week. So again, I tell you, I've been saying this for a while. You see CNBC, and Kramer's always been influential, but you got everybody on CNBC now. You got Carter Worth, you got the one chart guy there from Evercore. I forget what his name is. These guys and then you got all the regulars on Fast Money, like Guy Adami and stuff. They mention a stock, like they pitch these stocks, and they go 2-3%. It's crazy. Like it's right back to like the way it was, and I can remember back like 2000, 2001, a stock would get a mention on CNBC and it would pop, 2-3%. It's crazy that they're doing that again because these moves are often short-lived. Now, Kramer's different. Kramer's always been influential. He's always been the most influential person on CNBC. So, but everybody else is influential as well, which is pretty impressive.
Pick of the week, MasterCard and Square caught it. That's traded 100,000 here, up 96 at 36.10. Visa, I don't think we saw that one reacting yet, but be careful on those ones. Visa, the all-time high, 110.74, but that not getting as much of a lift. Dennis, we got about 4.5 minutes here. Anything that we haven't covered, or you want to do a little more imbalances?
Well, it's a very mixed market today. Like this is, the last couple days and Friday trade as well. I mean, it's very confusing to a day trader when you see some stocks going straight up, some stocks going straight down, and the market's up. Here we're looking. The S&Ps are trading up 2 points or trading up 20 points, and the Dow's flat. That's a funny day, and we're kind of seeing a repeat of it here today, where we're seeing some stocks blasting off in the pre-market. Like I was saying, Square is way up here again. Square seems to go up every pre-market. In PayPal, MasterCard way up, and I guess it was Kramer maybe the catalyst for that. But I'm looking, at some of the oil stocks are trading higher this morning as well. But then, and Alibaba's trading up $2. But then you're looking at some of these other stocks. Financials are all weak here this morning. You got Merck down another $2. We know on that bad news from their Keytruda drug. But you got Caterpillar trading down another 86 cents here. I mean, the cat, it's just kind of been hanging out. General Motors getting crushed this morning.
Not bouncing off 43, Dennis.
No, it's not. And that's concerning as well, which we were saying. I mean, there is some big stocks up and big stocks down. I think you're going to continue to see this. It's what we would call stock pickers market. And people say, well, what is that? It's just the fact that, stocks are all moving in their own direction. If you're in the wrong stocks, you got the market going up and you could be doing really bad. If you're in the right stocks, you got the market going down, you could be doing really good. I mean, here's Apple trading up another $1.29 here this morning. I think you're going to see some follow through. I think you're going to see some follow through on some of these stocks that were on Friday. I like my 2-day move. That would mean stocks like Apple would be stronger here. Stocks like Microsoft, which had a huge day on Friday, could actually turn around and get stronger as well, despite the S&P being down. I think you might see some follow through from the moves on Friday. Amazon's down $3 here right now. Is a huge move. It gets up over $1,100. If it can really, get up and over, 1105 was the high on Friday. Takes that out, and you could see some follow through here. So I'm looking for a continuation of the moves on Friday. That's how I'm playing it today.
All right, Dan. The all-time closing high over 1,100, 1,100.95. That high on Friday, 1105.58. So I think just a general theme with what Dennis is going. If you're going to these stocks that were strong on Friday or the stocks that were weak on Friday, let them follow through that Friday high or low and continue. If not, you might get a little bit of a reversal. What I'm looking at here, and I just are waiting for the S&Ps to bounce. I mean, you kind of feel, shorting it in a hole, down 5.5 points. How often has that been a profitable strategy since, 2008? But looking for a little bit of a bounce mid-range on the day. You got the all-time closing high at 25.7850. If you really get moving to the downside, folks, just be aware. Support on the daily chart, the Friday intraday low is a good 10 points below here at 25.63 1/4. Spencer, coming up on the top of the hour here, you want to wrap things up and preview tomorrow's show?
We can, but can I get a quick imbalance update from you, Dennis? Anything changed?
Yeah, so if you want me to just go through them, Square 169,000 to buy. The stock's trading up another 80 cents. It's been a monster. G is now 526,000 to sell. Again, that's the exact opposite stock of Square. Alibaba 221,000 to buy. That's growing. It's up $2 now. Twitter 116,000 to sell, pulling back a little bit from its last couple of days move, maybe just having a little bit of a pause. But again, I think there's some underneath demand here in Twitter because it's blasted off into orbit, probably caught some shorts by surprise. General Motors 183,000 to sell. Bank of America 136,000 to sell. These are big selling balances. Pfizer 106,000 to sell. I've got Verizon 51,000 to sell and AT&T 108,000 to buy. Those two going in opposite directions as well. Coca-Cola 59,000 to sell. MasterCard, we already talked about it with Kramer being his pick of the week or whatever. 38,000 to buy. They're fairly big and they're fairly mixed. It's a tough market to figure out right now.
All right, be careful out there, Dennis. Here, we don't want to let your sports hangover tune in to a bad trade.
Oh, the sports are killing me. Don't even talk sports.
All right. Well, I will just say that bad things come in threes. So watch out, Dennis. Watch out.
Okay.
Okay. That is our show for us today, folks. If you missed any part of it or you want to catch it again, you can do so on our podcast on iTunes, SoundCloud, and on Stitcher by searching for Benzinga or PreMarket, or by going to youtube.com/BenzingaTV. It's our YouTube channel where the show airs live every day. You can rewatch it there. But that is it for us today. Hope you all had a good day and have had a good day so far. We'll be back with you guys tomorrow.